without the channel activation. So we are doing it again right now, and let's get started with the Euro USD. Uh, it's a 4-hour time frame which is flashing on your screens, but I think we start from Euro USD daily chart, and the daily chart is clearly telling us a story that. So we'll quickly discuss the larger degree counts in this session, and then we'll follow up through the small lower degree counts during the London and New York Times. Correct. Uh, so the larger degree count is clearly identifying a classic Elliott wave pattern, which is a 5-wave higher, which is impulse, followed by a 3-wave lower, A, B, C, and ideally it should this pattern should complete 5-wave higher from here. And it won't be a surprise to see the price action rallying all the way towards the channel resistance, which is seen around 1.19. All right, so before we discuss the lower degree time frames in the next coming up sessions, what we'd like to emphasize is if you're still sitting on the sidelines in the euro, it might be time to initiate further longs. Right now, as we speak, its prices are trading around 1.0817, and possibly rallying. I mean, we've got almost 1,000 points of rally left on the north side. All right. Now, technically speaking, the stop loss would be just below wave one termination, which is seen at 1.05. So, quite a bit of room is left on the north side, and I think it's as we enter the last trading day of March, it would be it would be really interesting to see how April turns out, because that is a termination of wave 4 already, and if wave 4 is terminated at a lower degree, I think the next wave should be higher. All right, and April could push prices close to 1.12 as well. All right, so keep this bigger picture in mind, please, and we will revisit the shorter degree time frames in the next sessions from today. All right, please excuse me for the delay, and it was actually because of non-activation, and we are now doing it again with the channels activated. So that's the first daily chart for euro. Let's go on with the dollar index chart now. So the US dollar index daily chart is also telling us a story, but that's on the south side. It's a classic Elliott wave pattern, 5 down followed by 3 up. There you are. So 5 waves down from almost 115 towards 99, and then followed by a corrective ABC all the way towards 1110 again. That's a 61.8% touch, and ideally now that it's unfolding or is wanting to unfold 5 waves lower, the magnitude should be ideally same if it's an ABC of larger degree, the magnitude of the first impulsive drop followed by the third impulsive drop. So by all means, it should be around another 1,500 points decline from 11110. And if we go by a simple calculation, 1,500 less 110 brings us to 95. Alright, so 95 could be the next target for the dollar index going forward. Now, before we go back to the smaller time frames and look into the subwaves, if you pay attention on the daily chart, it's almost beginning to cut loose on the south side as we begin to as we enter to begin the April series. All right, and if you are still sitting on the sidelines, maybe it could be time to enter on the short side with a stop loss around 107. All right, so that's the biggest structure, daily structure for the dollar index. Now let's flip the chart to gold. The daily chart in gold is also emphasizing a story which is kindly coming to more or less coming to an end as we speak. Minor degree waves ones and twos and threes and four are looking complete, and minor degree wave 5 is in place, is unfolding actually. Now, minor degree wave 5 could, the Fibonacci extensions are truly pointing towards 3200 levels, so maybe 3286. But it may not be, I don't know if it's going to extend towards that mark at any time soon or after a pullback, because if we look into the sub waves, after wave 4 minor terminated, then the minute degree 5 waves 1, 2, 3, 4, 5 are almost looking complete, close to 3100, possibly if they are not completed around the 3100, it could go towards 3120, 30 levels. All right, and that's the case, then a major reversal could be in the works pretty soon now. All right, and you can see the diverging scenarios here with the previous peak around the 29 levels, 29.58. That was the peak, and now we are trading just close to 3100, and we are still the RSI is still nowhere near the new highs. All right, so speaking about those uh, upside targets around the 3298, I think we are quite a bit near to potential top formation. So trading point of view, absolutely flat we are standing right now, but just in the next session or maybe during the New York session, we won't be hesitating to initiate aggressive short positions just around the 31, 31, 20, 30 zone, at least on the partial side. All right. So if you are by chance in the long side, because we waited for the bulls to drop towards or pick up from 2990 over the last week, but it turned higher ahead of that. So another long entry was missed, but it's okay. That already always happens. So many times that is what is called trading actually. So talking about what's next, we would be more inclined to go on the short side from around the 31, 20, 30 zone. All right. And the last big story is in pound. The GBP USD pair, the daily chart is coming up on your screens now, and the larger degree trend is absolutely on the north side. We just want to reconfirm all the daily charts in this session, and we will come back on the smaller degree time frames as we begin the London and New York sessions going forward. But the daily chart in pound is also clearly confirming that we've got 5 waves higher, that is wave 1, 2, 3, 4, and 5, followed by a complex combination I've labeled WXY over here. Maybe it's a 3-3-3 pattern because the last wave doesn't look to be an impulse. It looks like a 5-3-5. And that could be a combination called WXY, which kind of completed a running flat at the 38.2% retracement. All right, so going forward, if we look at the rally that we are seeing right now from 1.2 levels, it's just midway. We are heading towards 1.38. So we have another 1,000 points of rally to be covered from here. Okay. Now, keeping this bigger picture in mind, is always going to help us determine what's going on in the shortest time. But always keeping this target 1.38 in mind would encourage us to initiate long positions right now as we terminate lower degree wave 4 and possibly lower degree wave 5 is underway. Now the stop loss in this case is going to be around 1.25, and even though it's offering a 400 points of risk, we can see a 600 points of reward going forward. All right, so that's something we should be keeping in mind. And finally, if you look at the daily chart of Bitcoin, what the story that is telling us is that five-wave decline, five-wave lower. It's quite possible that five waves are complete at a minor degree. We've got wave 1, wave 2, 3, 4, and 5. I need to shift that wave 5 here. Over there, sorry, and minute wave 5. It's quite possible that we've completed the 5-wave minor degree rally. And what we have seen on the right hand side is again a 5-wave decline from the peak at 109. And that could be a corrective wave which is underway, and within the corrective wave we've got wave A and B, and possibly we are looking towards wave C higher somewhere in the zone of 95,000. So we will be keen to initiate short positions if prices rally from here around the 90 and push through 95. We will be more inclined to sell. Now on the other hand, you remember the first rally we tried on the counter trend side. We might be inclined to do the same around as prices trade close to 82,000, which is the 61.8, close to 61.8% of the first wave A. So maybe when we come back in the London Times or New York Times today, we'll be more inclined to go on an aggressive long with the stop at 76 and targeting 95. But whether we go aggressive long or not, we still have a few days to at least wait until prices reach 95 to go and sell there. All right, so we've reviewed all the daily charts of the major trading pairs where we've got trading interest on. We'll bring up the Dow Jones during the New York Times, and kindly excuse me for the small technical hitch of the deactivation or inactivation of the broadcast while it was being broadcasted actually. So nonetheless, until the next time, as always, thank you for tuning in, and take care and God bless. Goodbye.